Trump's credit rating equals sign. Big trouble for Americans? Join me as I dive into the potential chaos of Trump's credit score and what it could mean for Americans like us. You might have heard that credit scores are a big deal, but have you ever stopped to think about how the actions of a president could impact your own credit score? Recently, President Trump's policies have been making headlines, and some of them could have a significant effect on Americans' financial stability. When it comes to credit scores, Americans are already facing a lot of challenges. For one, credit card debt in the U.S. has reached an all-time high, and many people are struggling to make ends meet. If Trump's policies lead to higher interest rates or reduced financial regulations, it could spell disaster for those who are already barely getting by. The threat of increased financial strain is very real. If people are forced to take on more debt or face higher interest rates, their credit scores could take a hit. And when your credit score suffers, it can be tough to get back on track. You might find yourself paying more for loans or even struggling to get approved for credit at all. This isn't just about individual financial struggles, it has broader implications for the economy as a whole. When people are struggling to make ends meet, they're less likely to spend money, which can slow down economic growth. And if Trump's policies lead to a recession or economic downturn, the effects on credit scores could be even more severe. Trump's economic policies, such as tax cuts and deregulation, have been touted as a way to boost the economy. But some of these policies have also had the effect of increasing income inequality and making it harder for low and middle-income Americans to get ahead. When it comes to credit scores, this can be a problem because people who are already struggling financially may find it even harder to improve their scores. The way credit scores are calculated can be influenced by a range of factors, including payment history, credit utilization, and length of credit history. But economic policies can also play a role, particularly when it comes to things like interest rates and inflation. For example, if Trump's policies lead to higher inflation, that could make it harder for people to pay off debt and improve their credit scores. Another factor to consider is the impact of Trump's trade policies on the economy. Tariffs and trade wars can lead to higher prices for consumers, which can make it harder for people to make ends meet and pay off debt. This, in turn, can hurt credit scores and make it harder for people to get approved for credit. The most significant insight here is that Trump's policies aren't just about politics, they're about real people's lives. If his policies lead to financial instability, that can have a ripple effect throughout the economy. And when it comes to credit scores, the stakes are high. A good credit score can be the key to getting a loan, buying a house, or even landing a job. As we consider the potential consequences of Trump's policies on credit scores, it's clear that this isn't just an abstract economic issue, it's about real people's lives. If you're worried about your own credit score or just want to stay informed about what's happening with the economy, it's essential to stay up to date on these developments. The bottom line is that Trump's policies could have a significant impact on Americans' credit scores, and it's essential to understand what's at stake. So what do you think? Have you noticed any changes in your financial situation since Trump's policies have taken effect? We'd love to hear your thoughts on this topic, so be sure to comment below. And if you're looking for more tips on managing your finances and improving your credit score, be sure to check out our next video on financial literacy tips.